welcome back to the channel. We're going to be taking a look at Chainlink, probably the hottest crypto on the market. Remember this. Remember we talked about Chainlink back at $5. Maybe it was about $6. Either way, it is a lot of people talking about Chainlink being the Google of Web3. What is it? What does it do? Before we get into Chainlink, also, we'll talk a little bit after we do Chainlink. We're going to talk about the macro. There's a couple of reaction videos I want to do because a lot of people are off sides. A lot of people still think we're heading to an inflationary environment, so we'll check that out. But until then, let's get started. Sorry, my whole setup got messed up. Got an Apple update, just for you guys to let you know. I got an Apple update and it messed up my camera, my audio, everything. So super late today. But anyways, before we get started, let's go. All right, yeah, let me know how the audio is too. I'm still trying to figure that out. Somebody said I need to pick up the gain. I don't know. We'll see. We'll see how it plays out. So here's Chainlink. What is Chainlink? We're going to get into what is Chainlink right now. This is probably the hottest crypto right now in the top 100 or the top 50 or the top 10, making its way up. It's probably the hottest crypto. We've been talking about it for a while, and we're going to talk about why, everybody's looking at it now. It's up almost 200%. Right, it got down to about $5. Actually, if you go a little deeper, it's like $4.95, and it's up to about $15 right now. So it is skyrocketing. Does it still have more room to go? Maybe, maybe not. We'll see. But what we're gonna do first is react to this video. So you guys kind of, if you're new to Chainlink, if you haven't heard our content on it, then we'll react to this video, and then you'll learn a little bit about what it is. So let me know if the audio is working. There we go. Let's remove this. This is kind of big, huh? This banner's too big. All right.
Video on social media, this is why Chainlink has the potential to 100x. First of all, what is Chainlink? And to understand what Chainlink is to understand why it will be so big. So Chainlink is both a cryptocurrency and a technology. Chainlink works with both blockchains and non-blockchain enterprises. Chainlink is middleware that connects blockchain-based smart contracts with external data such as baseball scores or stock prices. It can connect with anything. Chainlink is blockchain agnostic. It can work with Cardano, Solana, Ethereum, Algorand, Swift, JP Morgan, Amazon. And then Chainlink's Link token is basically the gas that makes this machine run. Chainlink's Link currency pays the Chainlink network operators and collateralizes the network's smart contract agreements.
So part of the reason Chainlink's so big is it is the most widely used crypto or digital asset, whatever you want to call it. It's the most widely used asset in all of crypto. Why? Because they all need to interoperate with each other. They need price feeds. They need an oracle, an oracle just communicates in between blockchains and keeps them connected. Right now it's connecting to the real world. And the big part is, I think he said it, is that it's not just connecting the crypto world, right? It's also connecting the TradFi world. It's also connecting JP Morgan Chase. It's going to connect all the traditional finance, all the big central banks. It's going to connect them to each other and to crypto. So it's agnostic. It's not, oh, it's crypto or nothing. It's everything, right, together. And so it has a wide use case. The question is, does it have value? What value does it add? Well, let's keep going.
So understand this. Chainlink is like the Google of Web3, connecting everybody, huge partnerships, little competition, settles quadrillions of dollars worth of value yearly, generates tons of revenue. We interviewed crypto expert, entrepreneur, and investor Kyle Chase this week. He lays out Chainlink's value prop. Guys, like the video, listen. I love what he says about Chainlink at the end.
Chainlink is insane. It's literally the only thing. I think it's going to be the Google of Web3. It has no competitors. Sergey has been building this thing since 2013, essentially ideating it in 2015 since building Chainlink.
Hey, check that out. So a lot of people don't realize that Chainlink's actually been worked on since 2013, before Ethereum. And this is not a shill against Ethereum or Bitcoin or nothing like that. I'm still, we're still pro Bitcoin. This is just to educate you if you're not familiar with Chainlink, because it's going to keep running. It's probably going to, I'm betting on this the most. And the point I'm making here is that it's actually been worked on. It's backed by SWIFT, the financial system, right? The World Economic Forum needs this to actually work. So you can kind of say the bug eaters, or whatever you want to call them, have actually been trying to get this technology to work because it's agnostic. It connects, it creates a blockchain. It creates a more stable, efficient, faster, secure legacy, or not legacy, but ledger for everybody, for anything, right? It's not just crypto. It's also traditional finance. That's what makes it so big.
And they have big partnerships with DTCC, which is the government regulated clearing settlement house for the United States securities industry. They settle almost $2.5 quadrillion a year in value. And they've been doing a partnership with Chainlink right now, where Chainlink will help them in that settlement process. And Chainlink will generate revenue off of all of the settlement value. So Chainlink will literally be processing quadrillions of dollars in value every year. And they have a revenue model, and that revenue model gets fed back into the tokens, the token economy, and that it's fully decentralized, where Chainlink, the company, doesn't take any profits. It goes back into the token ecosystem. So just think about that. And
okay, I'm going to slow it down a little bit, right? I'm going to slow it down a little bit. So if Chainlink is kind of like taking a piece of every transaction, right? Let's say 1%, just for a hypothesis, 1%. Well, DTCC is using it. DTCC, the Depository Trust Settlement Layer for all securities, literally, whether it's U.S. Treasuries, whether it's stocks, whether it's, which are equities, no matter what it is, everything that's transacted in the U.S. or from the U.S. or to the U.S. goes through DTCC. Last year they processed $2.5 trillion to it's something like $2 to $4 trillion of transactions. So if those are going to get processed through Chainlink in the future, right? Well, 1%, what is that? That's hundreds, and that's not even counting SWIFT. That's hundreds of billions of, not billion. Yeah, it is hundreds of billions of dollars of revenue if you extrapolate it out, right? 10 years. Either way, the opportunity is insane because of how much is going to be transacted and how much it's going to collect. Kind of like you swipe your Visa card, your credit card, and Visa takes like 1.2%, right? We're not saying it's going to be 1%, but the revenue generation is insane. We have a model of it, but I don't know if it's going to be complete or if it's actually real, because it's insane and I don't want to, pump the price. No, I'm just kidding. All right. So yeah, that's what that means. I'll answer some of your guys' questions here also going forward, but let's get through this video.
I hesitant to say something because people think I'll be ludicrous, but I wouldn't be surprised if Chainlink surpasses Ethereum because of the revenue it's generating.
So Chainlink's secret weapon that BlackRock would be very much interested in is CCIP, Cross-Chain Interoperability Protocol. CCIP can connect BlackRock to Ethereum, to Chase Bank, to Solana. Chainlink founder Sergey Nazarov explains why BlackRock and financial giants like it will be using CCIP and Chainlink at some point in the future.
So BlackRock, the biggest asset manager in the world, you got SWIFT, right? The biggest central bank messaging system in the world. They're all connecting. They all need to tokenize their assets. They all need to use the Chainlink's infrastructure called CCIP. There's not another crypto that's actually getting that type of use case. It's just not there. That's why I'm so bullish on it. That's one of the reasons. But yeah, BlackRock, the biggest, and when you say, oh, BlackRock is going to change the game, right? They own most of the assets for the world. And so that's the big, now here's the explanation. It might get kind of foggy, but stay with me. What's the price? He'll talk about a price prediction. I'll give you my price prediction after the video. It's not, we're not going to watch the whole video, just a clip. But yeah, price prediction, we'll do those. We'll look at them. They don't mean too much, but it is mooning.
So CCIP is pretty low level infrastructure. So it's like, I understand why some people don't fully understand all of it. It's similar to something that's also pretty esoteric, TCP/IP. So TCP/IP is a messaging system. It's an information transfer protocol that creates the internet. So the whole internet runs on TCP/IP. It basically connected all of these different internet technologies into one network called the internet. And so we all use the internet, which is run by TCP/IP. It's actually a very similar situation to what you see with chains, where there's these siloed separate ecosystems, and CCIP, the cross-chain interoperability protocol, seeks to connect those separate chains and ecosystems into one network. And so the experience that you should end up having is similar to the experience on the internet. Like you use one application using one technology and one set of cloud providers or something, which you don't even know what those cloud providers do or who they are. And then your application using one set of technology can connect to another application using a completely separate set of technology, because those two applications can communicate, right? And you don't even know that that's going on because TCP/IP is doing all of that in the background. So that's the world that we should arrive in the blockchain world. That'll create what I call an internet of contracts, where regardless of which blockchain you start on, so you can start on blockchain A or B or C, you'll be able to equally easily use everything on blockchain A and B. And you won't even have to think about it. You won't even say, I want to use blockchain A or B. You'll say, I want to use application X and Y. And application X is on blockchain A and application Y is on blockchain B. But you won't even be thinking about what blockchain do I want to, you're not going to be, just like you don't think what server technology does this app I use run on. You don't know or care. You just know you want to use the app. So CCIP seeks to unify the public chain world into a single internet of contracts. And then it also seeks to unify the bank chain world, because there's these two separate worlds, actually. There's the bank chain world and the public chain world, and they have this big legal wall in between them. And that legal wall is slowly, brick by brick, coming down. And if both the public chain world and the bank chain world run on a single messaging standard, then their ability to communicate when that wall goes down is going to be very natural, because they've already been communicating within their specific networks with each other using that messaging system. So it's both getting public chains hyper-connected, so you can use an application on another chain regardless of where you begin your journey, or whatever token you buy, you can use it somewhere else. Banks need to connect and transact with each other. And then the third step is actually getting the bank chain universe and the public chain universe to transact. And that's the thing that I was briefly explaining.
So here's how I like to think about it, right? TCP/IP, whatever it's called. That's the actual protocol layer of the entire internet, which nobody really heard of unless you're a tech person or computer engineer. So usually all we know is the application layer. We know Google, we know Google, we know anything that we use as an application. That's where the value is at, right? That's where we understand how the internet works. But most people don't know what TCP/IP is. Now this is actually creating a Web3 version of TCP/IP, but with smart contracts, right? Ethereum has smart contracts. A lot of crypto is about smart contracts, 80% of it. Bitcoin is not about smart contracts, totally different. Okay, so in order for those in order to actually collect the value, right, or own that connection, this is what Chainlink has, CCIP. So in general, what you're looking at is you're owning a new layer of the internet. You're owning a piece of the new layer of the internet that connects. All those connections bring value to crypto. And so you can own that, right? And there's two layers. There's the private chains. Well, crypto is the public chains, right? Those are the public chains: Bitcoin, Ethereum, XRP, all those are all public. And what CCIP is allowing, or Chainlink, is for the actual private chains, which are going to be like JP Morgan Chase, the big banks, right? Asset managers. Those are private, right? The legacy system doesn't want to adopt a crypto. They want to plug in. They want to plug and play, right? So in order for them to plug and play, they need infrastructure or protocol to do that. So this allows them to plug into Web3. Now the big players have access to all of crypto, and the best protocols in crypto, the best smart contracts are going to win. They're going to have more liquidity, and that's what Chainlink provides for them, right? Now, the thing is, all that value that goes across chain, whether it's bank to bank, right? Central bank to central bank, or public bank to public bank, whatever, crypto to crypto, all that value gets captured within the Chainlink token. That's what makes it so big.
In the talk, and that's worth tens to hundreds of trillions of dollars in value flowing into the blockchain industry, which I think will be quite meaningful if it happens.
So Chainlink is vastly different from how it started, orders of magnitude more impactful than how it used to be. CCIP is revolutionary. I love the way Kyle explains it here. Listen.
Chainlink, is it vastly different from how it was in 2018, 2019, when it did really well in that bear market? Obviously, we know it's been working with Swift, so much stuff going for it, but is it like the tokenomics are vastly different, or just the partnerships are vastly different, or it's just like a order of magnitude higher than as good as it used to be?
It's magnitudes more impactful. It just, so folks are really bullish on XRP Ripple, and I think it's a particular use case as well. There's a lot more like Ripple and things like Quant Network. They're all what I consider like these enterprise coins, right? Enterprise focused on government adoption, institutional adoption. Whereas Chainlink just really started rolling out what's called CCIP. It's this cross-chain interoperability protocol, and this is something that allows you to transfer not only value but also messages to different blockchains in a seamless way. And people who know me know that once upon a time I was very bullish on Polkadot because they were trying to build this narrative, and the problem is that Ethereum has dominated the narrative, and Ethereum layer 2 and 3s is, I think, a majority of development will happen with Ethereum as a settlement layer, and layer 2s and layer 3s and things like ZK Sync are building, hyper chains, and you've got, Optimism who are building these different OP stack. So you got now Coinbase is an OP stack, BNB's layer 2 is now OP stack. So all these people are building their different blockchains, and in the future, we're going to have different app chains. And so every bank that wants to customize their own chain will have their own app chain. Every big, enterprise at Tinder will have their own app chain. These guys will have their own blockchains that need to be able to communicate with one another, and not do it through these bridges that have been, plaguing our industry. Most of the value lost has been through bridge attacks because bridges are centralized and they're not trustworthy. So Chainlink is building something that has, removes the need for bridges. And allows these chains to natively communicate with each other, which is what the internet of blockchains is supposed to be. This is literally the solution that brings native communication between blockchains, which is mind-blowing. And nobody else, it has a complete monopoly where layer 1s, layer 2s, bridges, DEXs, they all have competition. Chainlink has no competition.
Again,
the way I like to think about that is like an operator back in the day when you had to communicate with somebody, right? When you wanted to call somebody. Let's go back to I don't really know, 1920s before the telephone, maybe the 1800s. The operator heard your whole conversation, right? They connected you. They had to connect you. That was the bridge. Well, if you had something valuable to say, they could always disrupt your message. Well, now this eliminates bridges, and now they can natively connect to each other without the security risk, right? Nobody can hear you. Now you just use telephone. Nobody can hear you. Now, theoretically, yeah, they can still tap your phone, whatever. But you're instantly talking to each other without somebody listening, right? Without a middleman, without that kind of middleman risk. And so that's what it does. I mean, there's a whole lot of things in here. I would actually suggest that you do a little deeper dive on Chainlink. I'll put if you're on YouTube, I'll add some resources underneath. Well, we have a video on it and we added the resources there. We actually had a long form talk on it. But either way, we'll keep going through this video. It's almost done. And if you have questions, let me know.
Again, Chainlink's secret sauce. Why TradFi, like BlackRock, would be interested in Chainlink. Chainlink's secret sauce is that it works with both traditional finance and decentralized finance. Everybody. CCIP connects everything, like the internet. Think about this. I love Sergey's prediction at the end.
If you're a bank and you issue a real-world asset token on your chain, and then that real-world asset token wants to get purchased somewhere else by another bank in another bank chain. If CCIP doesn't connect your two chains, you can't conduct a transaction, which is a problem that I think people in the banking world understand. And then in the DeFi world, they just want more access to more users. And so right now it's still pretty siloed. There's a couple of thousand users here, a couple of 10,000 users there. But if you just make a single system where all the users can flow into your application through that one system, then everyone just wants more users. So it's pretty obvious in that sense. It's going to be a lot of work. There's a lot of complexity there. I think the more value that flows over CCIP and the more messages that flow over CCIP, the more it's going to need to scale. But we spent over 3 years building this, and it's gone through a multitude of audits, security audits, like everything else that we build. And we, from what we can tell of all the other bridges and all the other alternatives, this is by far the most secure one and the one that has the most features and the most ability to actually give people connectivity in both of those places. So I predict that that'll be useful to people.
BlackRock right now is exclusively interested in Bitcoin. True. But understand, when their ETF launches, that's going to pump the price of all cryptos to the moon, especially ones fundamentally strong like Chainlink. But then next cycle, who's to say that BlackRock won't partner or integrate with Chainlink, especially since BlackRock is literally connecting TradFi with DeFi. They're going to need something like Chainlink. True, maybe a 100x isn't possible this cycle. Maybe we only get a 10x to 30x. But what about next cycle? BlackRock makes a 100x possible. What do you think?
And I do think that Chainlink, probably not in this bull run. This bull run, I think my price targets are around $200-300 for Chainlink, maybe $400.
Bro, that's a price prediction right there. 200, 300, 400. Those are his. That's his conservative. Are you kidding me? That's a big price prediction. So let's get back to the price. Where are we at right now? What are we pushing? 1490. I mean, this thing is a monster, right? This thing has been a monster. And let me show you how strong Chainlink actually is, right? Versus other coins. I have up here. Here's XRP. XRP is trying to make a move, but I mean, you know, XRP is vaporware. I'm sorry if I hurt your feelings. It's old. It couldn't even make a new high in the last bull cycle. It has a second cycle curse, they call it. And if we look at Chainlink versus Ethereum, you can see it's clearly breaking out versus Ethereum. This is Chainlink versus ETH. Okay, let me try to make it a little clear. This is obviously the down pattern, right? It moved against ETH in the past cycles, and then it came down in the bear markets. Now it's starting to break. Once we broke out of the channel, I got bullish. I'm actually going to show you, okay, I'm going to show my position, how much I'm up right now. I don't want to lead with that. Don't lead with your wallet because you'll get used. No, I'm just playing. So anyways, Chainlink breaking out against Ethereum, right? So I'm expecting it to at least go back to the highs. We'll see against Ethereum. This just shows you that it has strength, that it is being bought versus these other coins. Oh, Dimaj, just a different dough. Dang, Dimaj, I know what you did, man. You wish you would have hanged on to that a little longer, huh? Imagine, and then you bought back Tesla. And then here's Chainlink versus Bitcoin, right? This is the big one also. Chainlink moving against Bitcoin. It did in the last cycle. It smashed against Bitcoin, and then it peaked, and then it came back down. Now we're at the end of the bear market, and we're leaving the bear market, right? A lot of evidence for that. And I mean, I think it's pretty clear we're out of the bear market now. And it's moving against Bitcoin. It's breaking that trend against Bitcoin. Now the actual price is also moving. If we do the Fibonacci, let's just take a look. See, dang, I got this big Fibonacci up here. His price prediction, all-time high was like 53. I think got down to 495. So the Fibonacci has this. What the heck is this? This must not be the real Fibonacci. The Fibonacci has us going to, let's see, top to the lows, somewhere around here. We're looking at, if you go, let's see, above the 1.618. So this is like the medium. $86. That's conservative. I think this would be your most conservative move, right? Doesn't mean go buy it right now. I would never buy. This is my rule. I would never buy when things are exploding. Buy when everything gets smashed. When you see it'll come back. It'll come back down. Who knows to what price? But you want to buy. I would buy when it gets absolutely obliterated. It's down more than maybe 10, 15, 30%. That's when you get in. Don't go chasing anything, right? This is just prepping the pie. It's just putting it in the oven, right? So the highs, he's saying like 200. The top of the Fibonacci would be like 216. It's broken that before. The last cycle, it went past the Fibonacci, right? So this thing might really do this. It might go crazy. He said 400. Golly. So if you have a monster bull run, I mean, that's a big return. That is a big, huge move to the upside, right? Buy into weakness. Yeah, exactly. Always buy into weakness. 200 is good enough. That's a big move. So this thing has been leading. I think it's going to top out. If we look at the RSI, it's almost due. It should be due for a pullback. I mean, previously the RSI gets to like 90 on the weekly channel. So you're looking for a 90. Let me see, daily chart. Daily chart, it's I think this is the last pump on the daily. Maybe. I don't know. I don't know. You can't predict these things. I think price target for me, if I do a Fibonacci just from the previous high and then this previous low, I see it going to like, I think I said 15, 16. I said 15, 16 yesterday or 2 days ago. So somewhere around here, it's getting pretty overbought. You also have some resistance up here around 18. So maybe, I don't know. We don't know, right? You don't know. You're measuring probabilistic. Measuring probabilities right here. So what is the probabilistic outcome? Maybe tonight's the high. Maybe today is the high, right? Who knows? But I think a lot of people are trying to short it. I seen on Twitter, people were shorting it and it was getting crushed. All right, now to the reveal. Don't take no screenshots. I'm gonna show you my position. So I'm not full of it, right? A lot of people might say, "Oh, I'm bullish on this." I'm gonna show you what I'm bullish on. I've been telling you guys this for a long time. Made that video. Literally, the thumbnail on YouTube is when I said, "Hey, it's time to buy Chainlink, #1 blockchain in the world." I'm scared. I ain't trying to get hacked. All right, so here's Twitter. We're gonna go over the macro. Don't worry, we'll go over the macro. So let me see right now. I just sold some too. I sold like 200 link. I'm gonna scale out a little bit. I started off a total invested about 59,000. Average price $8.37. Oh, you guys can't see it over there, huh? You're probably pissed. All right. So yeah, this is Coinbase right here. Hopefully I don't do nothing stupid. I'm definitely not trying to get hacked here. Anyway, so here we go. 60. So all-time highs. Oh no, returns. I'm up 60,000, right? I'm up 60,000 on it, up pretty much 100%. Average price 837. It's the biggest part of my portfolio now. And if it pulls back, I think I'm gonna get deeper in on it. Right? I don't want to keep it up here too long because it feels kind of sketchy. You're not really supposed to show what you have. You're not really supposed to show that. But I told you guys I would do that. Right? Feels so awkward. Ugh. Feels cringy. But that usually gets the clicks. I just don't like to lead with that. I rather educate my audience and then let you know, hey, look, I am long. I don't want to lead with it. Oh my God, look, I am up this much. If you want to learn how to do this. Nah, we've been talking about this for a while. So if it goes to where it says it goes, I mean, you do the math. We'll see. We'll see what happens. Hopefully I don't get scared and sell out. Yeah, we're buying Chainlink at 5. Remember we made that video? I think a couple dudes bought it at a couple guys bought it at what, 5? A couple dudes got it at like 5. So this is my type of trade though. This is what I like to do. I know people do day trading and stuff, but I like to do the big macro cycles and take my time. And when these things explode, like I said, I'm making a course, creating that course. When these things move, they move. You just got to be in the right coin, right? A lot of coins are not going to move up. Another coin I'm looking at right now, the only other coin that I understand is doing good is GRT, the graph. It's only $1 billion. It's very small, but this one's really risky. It is the #1 in what it does. It indexes data. It doesn't have a huge monetization. It's not huge on monetization, but I mean, the all-time high was like $2 and what, 90 cents? Got up to like it almost got to $3. It's at 13 cents, right? So it's #1 in its field. Can it get to all-time highs? We're still doing the research. We'll see, find out if that can do that. What do you think it will pull back to? That's funny. Everybody wants to know, well, where does it go? No, I feel you. If it pulls back, let's see, you can use the 51% retracement. Let's say from here, if it does pull back, I mean, I don't think it pulls back. It's a crypto. It's not going to pull back to 8 unless something really, really crashes. I'm going to go from the breakout. Let's say from the breakout where it really started to get volume, which was about $8. Let's go up here. I'm going to say somewhere between 12 and 11.50. It might not happen though. It might not happen, but probably I say at least it comes back to 12. At least it comes back to 12 at some point. Right? That's what I'm thinking. If I were to at least back to 12, this was the last consolidation before it started to break. Told my dad to buy. You told your dad to buy at 6? Yep, exactly. So, yeah, Chainlink, #1 blockchain. You'll hear more about it going forward. It's going to be all over the internet, probably on, and look at it versus XRP, just smashing XRP. It's like XRP, you can go, I mean, I'm not even like, it's just, I'm not in the mood to talk smack right now. I'm tired. I had to work with this damn computer all day. It drained me, man. Trying to mess with this damn tech freaking pissed me off. But what I wanted to go over also was some of the macro stuff. Let's go over that. Oh, Tesla. We got some Tesla news. Let's switch over to Tesla. All right, let's switch over to Tesla. Let me just switch the banner. Tesla update. Let's go to the Tesla update. All right, you Tesla haters, you can leave the chat. Tesla holding on pretty good here. It's holding on. I think it has a chance to move. But here's the real update. The update for Tesla. How do we want to view this? Let's go into the intraday. I was looking at this all day. I want to show you guys this. It's been holding this pattern. Hopefully you guys can see it here on TikTok. It's a little messed up. I'm gonna leave it on here. Should I leave it on pre-market lows? Nah, let's take this off. Let's take this off for at least now. Take off these pre-market hours. All right, let's leave it like this. Yeah, so it had that big dip. Here's the gap to be filled, right? That gap starts like up here. It's like 225. Once it gets above 225 and holds, it's off to the races. It's been dipping. It's been holding in here. Now, the big catalyst for Tesla right now is not only are they setting up for India, the Indian government, but they did do well in China. They produced a lot of cars in China, number one. The big news is they're set to raise prices tomorrow evening, Thursday evening after the close. They're set to actually announce price hikes. This was what the bears were really betting on, and this is what the bulls and the investors were mostly worried about was Tesla. Where's the bottom of margins? Where do they stop cutting prices? If they start increasing prices, that's going to be the signal that the price hikes are, the price cuts are done, and here comes the hikes, right? At least in China. So that should be a huge catalyst. If that is the case, right, especially with this bull market, this Santa Claus rally, Tesla's going to rip. Tesla is going to rip if that's the case. So that's your catalyst right now. Now, I want you to look at this price action. Check this out. Going back to the past, we've seen this so many times. It dips. You're basically getting, I want to throw this on. I kind of want to remove all this stuff. Let me put it on here. Let's put it on here. Let's go to the 4-hour chart first. Actually, no, let's go to the 30-minute chart. Right? So obviously it's pretty clear you get a reverse head and shoulders. You're seeing, let me take that volume off. I don't want to see volume right now. Reverse head and shoulders is what you're getting. That's what we see. Okay? You guys can peep it out, right? Here's your shoulder. Remember, I was like, maybe this is the bottom. I remember back then I was like, here's your shoulder, here's your head, here's your shoulder, breakout. And then nope, that was just a mini one. So here's your real. Yeah, unfortunately that was bigger. So I'm still down on my position. I rolled it into February. I'm rolling it out, right? You got to adapt. You got to adapt. I was down on my calls, but I'm rolling it out and I'm adding. So here we go. Big dip. Here's your head and shoulders. Here's your reverse head and shoulders. Breakout above about 425. I'm going to say 425. Maybe it retests, maybe it doesn't. But I think when that news comes out, it's going to fill that gap for sure. And then we'll see how the overall market continues to react. Your biggest catalyst come in next week. It is the inflation report. I happen to think because the way oil is looking, that inflation report is going to be very, very good. Very, very good. That's my expectation. We have a really good inflation report versus what people expect. Okay, what else we got here? Gap fill to the upside. Sell your house, buy the pullback is crazy. I know, sell your house and buy the pullback. Hopefully Tesla breaks out and then Chainlink is pulling back at the same time, and then I can just, rotate back into Chainlink. Because Chainlink has the most upside, in my view, more than Bitcoin, more than Ethereum. He actually challenges, is it bigger than Ethereum on that video too? He talks about it being bigger than Ethereum into the future, not anytime soon, maybe the next couple cycles. I know people get big, some people get mad, but this is going to be a big name. All right, macro. Specialty. Let's go to the macro. So yeah, Tesla price hikes coming in. Chainlink maybe tops out around 15. Watch we wake up, it's at 20. But you're gonna get those price hikes pretty soon. And let's go over this. This is basically okay. We're looking at Twitter here. Make sure we get this. There's a lot of stuff going on in the macro that people don't know. First, number one, this looks pretty bearish. Okay, let's try to go through this. SPX companies reporting negative EPS surprise for Q4 2023, seeing the largest average price. So we're seeing the biggest average decline. Oh, you guys can't see it. The biggest average decline in downside surprises. This sounds very bad, right? Recessionary. The biggest downside surprise for the S&P 5-year average for earnings decline. But it's really mixed because you're also getting a big upside move. You're getting a big beat on earnings for the mega caps, for the NASDAQ, for the big cap stocks. Sorry, my brain is gone. I am burnt right now. I haven't been getting no sleep either, so I'm still here. I hate that. I need to get some sleep tonight. Institutional investors went into November as risk averse. So this is showing us where investors are very risk off, right? Their risk is like, this is the chart, zero, you got zero here, right? They're super risk off. So what that means is the more risk off they are, the more chances you get of a pretty sharp rally. So we're seeing this in spite of that rally, right? In spite of the rally going up, the VIX is down. So I think this rally keeps ripping, especially somewhere around the inflation report. Maybe we move up, maybe we break the new highs, then we come back down. But this next report, I think, is going to be good. I just think the next couple, where is inflation coming from? We talked about this. Can you chart Teller? What is the actual Mr. Les? What is the, I don't know, what is the ticker for that? So yeah. So anyways, people are risk off. Here's another chart right here. This guy Data Track has some good stuff. If you want to follow somebody on Twitter, he's really good. This dude is insane with the data. He's a nerd, man. He's a super nerd. And he worked for not Benjamin Cohen. He's like a famous trader, one of the most profitable traders. Anyways, this guy's a monster. He's been on the podcast. He talked about how he talks about this guy that's doing this data track. His name is Nick Colas. He talks about, he's the one that also said the only one who survives in automotive is going to be Tesla and Toyota. That's it. Everybody else dies, he says, in the next 5 years, whatever, not tomorrow. Anyways, so he had this chart that he said that actually showed how it's more bullish when companies are non-correlated with the S&P, when you're not correlated with the S&P. Oops, let me change that banner. I'm not talking about Tesla no more. I just mentioned him though. So he has this chart that shows the more non-correlation you have with the S&P, the more bullish it is. And we're seeing that. We're seeing that, right? So this is basically the following FactSet chart, S&P net margins. So although revenues are down and a lot of stocks are missing earnings, and their expectations guide lower, you're also seeing a lot of expectations guide up. So here's why you're probably going to get confused when you hear, oh, recession. Margins are hanging on. Margins are actually better. So profit margins are what's most important. Yes, revenue's down because consumers are slowing, right? There's a slowdown in consumption in this quarter coming up in the fourth quarter, but so far margins, right, the retainership of those earnings are coming in a lot better than expected. As a matter of fact, they've been climbing for the last 4 quarters. So profit margins are increasing due to AI, due to inflation coming down. Inflation is not coming down. Yes, it is. PPI is down. The dollar chilled out a little bit finally, right? Now you got yields down, valuations, you got multiple expansion. So yields are up. This is huge. This is huge. As a matter of fact, margins for the S&P are actually larger than they were pre-pandemic. That's what's crazy. This big boom, this big upside move in margins, well, that was the printing of money. So we pretty much bottomed out. Now the margins are climbing again. So what does that tell you? That the cycle is now making a higher low. You're making a higher low in net interest, not net interest margins, but net margins for earnings. That is huge for the stock market. That's why we're getting a rip rally in the NASDAQ more than anything. You're seeing Microsoft explode because AI is actually working. It's creating more productivity. It's bringing down their costs. And a lot of companies are going to struggle while they do, pretty good. Now let's go to the economy a little bit, right? We'll look at TRB. Okay. Look at the economy. So this is also interesting. This is basically recession data. I'll probably do this again later because my brain doesn't work that good. But S&P, a total of 50 companies filed for bankruptcy in October, down from 61 in September. So this is the month-on-month filing for bankruptcies. If we were heading to such a deep recession, we should see this spiking. Okay. The low was what? The low was November 2021. Obviously, there was no bankruptcies because we were like literally getting a boost from the White House and from the central banks. You had a lot of money. You had a lot of liquidity come into the market, right? The peak was back in March. This was the banking crisis. This is when we had the most bankruptcies on file. That's came down, went up, and it's coming back down. So you're not seeing a spike. As a matter of fact, bankruptcies, right? U.S. bankruptcy filings by month are coming down. Not like tremendously, but they're not spiking. So this whole narrative of, oh my God, banks are collapsing and bankruptcy and blah, 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 they're coming down. You just don't see them. They highlight the stuff. You see the highlights of, oh my God, this bank went under, when really they always go under. It's not nothing new. Okay, and the upside, on the top side, this is by year. So we are pretty elevated by year, but obviously 2023 was a pretty nasty year, right? We had the SVB failures. We had all those banks fall under. But historically, is it really that high? Is it really that high historically? We got 2 months left? Not really. Not really. So I know that doesn't seem super bullish, but given how offsides people are, given how off or how risk off people are, how much cash they're in, they're expecting this humongous recession and slowdown. It's just not happening. Now, this is back to profit margins for S&P. This is a bunch of nerdy data, but if you do understand this data, and I'm gonna talk about this in the course, if you do understand this data, you're gonna have more insight. You're gonna say, oh, that's why he's bullish. It's hard to understand. People just want you to tell them what to do. But when you see the actual data, you can understand the market psychology and why people are going to be offsides or underweight, overweight, whatever. So here you're looking at quarter over quarter and the actual trend of profit margins. Well, profit margins came down. They peaked in Q1 of 2022. Obviously, that was January. This is when the S&P peaked. Now profit margins are bottoming. We just saw that last chart where profit margins are starting to bottom out. They've been going up for 3 months. If that's the case, well, profit margins for S&P, they're done going down. So expect a rally. What's going to knock this off? Oh, well, I know 5 companies that had bankruptcy. They're too small. Nobody cares. Nobody cares about Rite Aid. Nobody cares about these small little companies that are like 2 billion, 5 billion here, little bank here, little bank there. Is JP Morgan Chase going under? I don't think so. Is Wells Fargo going under? I don't think so. Is Apple going under? I don't think so. Apple has more cash. Berkshire Hathaway has more cash than most companies are worth in market cap. What do? They park that cash in the money market funds. They're collecting 5.5% interest. Now they have more income. Now they can actually fund their own debt. And this is exactly what rich people are doing also. Rich people are probably 20 to 40% of consumption in the US. They consume a lot, right? All these young kids on YouTube streamers, they're making money, right? I don't want to say that. I don't want to go into that. A lot of people are paying them. They're making money and they're spending money, right? And if you're and they're probably not smart because they're just spending it, but the baby boomers, the wealthiest class, they're parking their money in money market funds. They're getting cash, they're getting dividends, and they're making more money. There's still excess savings in the US economy. You're hearing, and a lot of people that I bring on too, that we're going to go into a deep recession, unemployment's going to spike, it's all over. I just don't see it. The data doesn't team. The thing is, we're very recency biased, and the people we know, we're like, oh my God, I know 5 people who can't pay their bills. But how many people do you really know? Not very many. Do you have a group of rich people? I don't think so. So it depends what class you're in. It depends who you are. That's why you look at the data, because your sample is not the real sample. Well, I don't trust any data. Okay, who do you trust? Joe Biden? Donald Trump? Who do you trust? You got to make a choice here. You got to make a definitive, right, logical reasoning. Don't use your emotions. Don't get sucked up into these TikTok shorts and, oh my God, everything's going to collapse. This is the biggest recession since 2008. I don't think so. The Fed can print money. That's what they do. They print money. We've never had that tool before in history. So this is very bullish. I didn't even understand this. If somebody can figure this out, then figure it out. I don't understand this, but it sounds super bullish, and it's all small, right? And what it says is CTAs. So these are, what are CTAs? Somebody tell me. CTAs, I think it has something to do with hedge funds. I really didn't understand this chart. Will need to buy approximately $148 billion in equities over the next month, the highest amount ever recorded. Sounds pretty bullish to me. Well, I'm only showing this because it sounds cool, but I don't really know what it means. So I'm not going to sit here and be like, oh, this is so bullish. It sounds kind of sus, right? But hey, I'd rather have sus in my favor. Past sounds bad. Past performance is not indicative of future performance, obviously, right? So I don't know. Maybe this means like some type of hedge funds have to get long. Somebody has to get long fund managers by the end of the year, and they have a month left. I mean, have we seen that in the price action? We just saw a vicious recovery. And today didn't really drop off that bad. So you're seeing a very vicious recovery. Okay, next data. Goldman. We don't think this is Goldman Sachs, by the way, and we're looking at manufacturing PMIs. We talk about this all the time, core goods inflation. Goldman Sachs says, we don't think the last mile of disinflation will be particularly hard. Meaning, I cannot talk, I'm sorry. The last, you can make fun of me if you want. We don't think the last mile of disinflation, so the last part of getting to that prices slowing down, we don't think that is going to be hard to get there, right? A lot of people are saying we're not going to get disinflation. It's going to be tough. The last part is going to be so tough. They don't think so. First of all, supply chains are improving. The goods sector is now largely completely done, right? There's not goods inflation anymore. It's coming down. People are not buying refrigerators and washers and dryers and cars. They're just still purchasing services. So supply is coming back on. So all those, all the immigrants crossing the border is, forget your politics. I mean, we don't like open borders. That gets all political. But at the end of the day, guess you know what the outcome is? The outcome is there's not a fight for rising wages because I mean they're going to settle for lower wages, right? So there's no wage inflation because immigration, to some degree, whether it's good or bad immigration, is actually helping with wage pressures. And you know what that also helps with? The more workers you have, the more production. And we see the evidence for that. More unit labor costs are down, employment costs are down, while goods and services produced per hour worked. So per hour worked, the good and service is going up. So productivity is going up, right? And that's why they're saying, hey, inflation is going to come out better than expected. I'm thinking at this point, we saw Neil Kashkari last night or yesterday say, what was it? Core PCE is down to 2.5%. Bro, a couple more months, we're down to 2% target for core PCE. And this is 3-month annualized, right? The Fed is done. Yeah, the Fed is done. That's going to be super bullish for crypto. Oh, well, there's a recession. Things are going to slow down. Great. And if they do slow down, that's good. We just don't want to collapse. And if they slow down, you know what that means? More cowbell, the closer I've been telling you guys this all year, the closer you get to recession, the closer you get to governments creating more stimulus. What does that do? That means you're going to debase the currency or you're going to inject more money. You know who benefits the most? The fastest assets in the world, the fastest horse, crypto, Chainlink, Bitcoin, Ethereum, XRP. I can't believe I said that. I don't cheer for XRP, but they're going higher. They're going higher because they suck up that liquidity and traders will be in there. That's all the show I have for you guys. Catch you next time. No, I'm just playing. I'm not ending yet. I'll do a couple Q&A if you guys have it. I know you said TRB. I don't know what that is. TRB. Tribal group. TRB typo. That guy's probably not even here anymore. TRB. Let me switch over to TRB really quick on the charts. So I'm going to give a conclusion too. I'm going to give a conclusion. I got to get back to work. Got to get back to that course. Keep working on it. TRB group. So this is what you wanted me to look at. Oh, you are here. Okay. All right. TRB group. I mean, what is this, man? I don't even know what this is. Is this what you're talking about? TRB? It looks pretty sideways. I don't know. I don't know what it is. Let's see. Can I find technology services, packaging software? Okay. Okay. Little penny stocks. You should go listen to the fundamental analysis podcast I had with Joel. He's a he's a fundamental analysis expert. I actually learned a lot from him. Let's see. This thing is up from May. 120%. It's up big, yeah. I don't know what it is though. Oh, this is a crypto? Are you talking about TRB USD, bro? Teller. Okay. Yeah. TRB. Here we go. Teller. Okay. Yeah, I don't know what this is. This thing is up big though. This thing is up big. This thing is just chugging. Whoa, that's up almost 1,000% from August. So yeah, cryptos are going to pump. Liquidity, the bottom of liquidity is in. Liquidity is going higher. I don't know what this is. It's pumping $140. Probably has a small market cap, I'm thinking. I mean, your chance to get long would have been here on this wedge. Nice little wedge pattern right there. You see that wedge? That's where you get in. You see the wedge form, boom, boom, and then all of a sudden it breaks the wedge, starts to break out. Support, higher. TRB, that's what you want to look at. Okay. Well, hey, I hope you make money. I hope all you guys make money, right? I really hope you do. I'm not here to tell you what to do, but to just analyze and give you some more feedback. I will say this, crypto will probably, I think Bitcoin dominance is going to come back pretty soon. And a lot of the altcoins will probably freeze and move sideways, maybe dump a little bit. And then you see crypto go. To me, if Ethereum starts pumping, I'm just going to tell you what I'm doing. I'm going to dump my Ethereum on the pump. And I'm hoping Chainlink pulls back, and I'm going to buy more Chainlink. So that's my goal. That's what I'm going to do. I've done this enough. I don't want to say I'm a veteran, but I've done enough to where I'm like, dude, at the beginning of the bull market, you want to squeeze the heck out of those cryptos, out of those altcoins. And then later on, maybe you rotate into Bitcoin or maybe you don't. You just let them run. So maybe Link is starting to peak now at this point. Look at that. No, I'm just kidding. I don't know what this is. Interlink Electronics. Ain't nobody looking at that. Link XRP going higher. Link BTC going higher. Link ETH breaking higher. Ethereum Bitcoin still struggling here. Still struggling here. All right, we're at 50 minutes. I want to pull these streams down a little. I'm going to keep these streams a little more limited, and then my goal is to actually get back on and look at some other news. So I'm going to be changing things up a little bit. Let me know. You guys don't be afraid to give me some feedback. If you think I did something stupid or I can improve on something, let me know so I can improve the experience, or I'll try my best to improve it at least, because you know, I can only see what I see. I don't really know. I know a couple of people are saying, "Hey, I can't hear," or your voice or something. I try to figure it out. I'm not a tech guy. It's, you know, you got to get it done. No excuses, but I will say, hey, sometimes I get really frustrated. I'm like, bro, what the hell? How does this work? See any other notifications? I'm gonna see. If you want to understand Chainlink, go follow this dude. His name is Fishy Catfish. He was on the Bankless podcast. Also, Bankless, one of the Bankless guys, capitulated in Chainlink. Invest in Kusama and Kaspa. Tell us what that is. I don't know what those are. Are they just names, or I don't know? Tell us what those are. I don't know what they are. Yeah, fishy catfish, and for Chainlink, fishy catfish and Chainlink God. Those are the two. Where's he at? Oh, he's not on there. Some dude tried to short Chainlink, lost 500,000. Golly, crypto been pumping. Yeah, crypto's been pumping. You guys probably joined so late in the stream. We're pretty much done with the stream now. But hey, we called it. Remember? Financial system that Wall Street, World Street need. They're adopting this new technology. When you think of CBDC, this is when we got. I'm not even gonna listen to that, but this is when we first got into, or when we first started talking about Chainlink, and feels good. Feels good to be early. Anyways, I don't want to keep this running. I don't want to waste your guys' time. All right, we'll be back on tomorrow, hopefully a little earlier, trying to figure out the studio. I'm gonna have to get, like, damn update messed everything up. Kaspa is pumping. What is Kaspa? Oh, that's what you're talking about, Kaspa? You guys got to give me the symbol. I don't know what Kaspa is. Kaspa USDT. Oh my gosh. Yeah, this thing is pumping too. I mean, when is this? October 2022? Boy, if you cut the bottom in that, 14,000, sheesh. Here's what they don't tell you. You better, yeah, you could lotto this stuff. This thing came down 60, 70%. Imagine all the people who sold right here. Oh, you guys can't see it. Imagine all the people who sold on that. KSM, I think. Imagine all the people who sold on that pullback. They're like, oh man, it's dumping, and then it goes up. That's a lot of pain. Yeah, I don't know. I can't talk about these because I don't really know what they do. I don't know if they have a real use case here. But hey, good luck. I hope you guys make money. I really hope you do. I really hope you guys make money. Let me go over the macro forces before we leave. We got to hit the macro forces. S&P 500, right? It capitulated, didn't break out or didn't break down. It looks pretty strong. I still expect a pullback, but it might not happen. There's a lot of people who are very anxious to get in. You see the RSI starting to pop there. We're getting that pop in the RSI. It maybe consolidate sideways, right? We'll see how that plays out. The Qs are starting to actually break. The Qs are breaking the downtrend. They're actually breaking above this consolidation. I didn't think they were going to be this bullish. I mean, vicious rally, right? Vicious rally. It probably slows into the inflation print. I'm going to keep saying that. Into the inflation print, we probably slow. And then boom, once it confirms it's pretty good, we take off. Obviously, Bitcoin's climbing, but that's a bearish pattern. How's the RSI looking? Yeah, Bitcoin looks like it's going to break down or retest at some point. ETH is weird, but ETH can still take off. ETH probably goes up. We're at the beginning of the cycle. The dollar's still kind of struggling. This is good. It's not dropping too fast. But it is making lower highs. I want to see that. Yields, this is the story. This is why risk assets are set to explode. Yields, 30-year yields just made a new low. 10-year yields making new lows almost. right? You're getting that reverse head and shoulders. So the cost of capital is coming down. When the cost of capital comes down, huge upside rally, right? That's the fuel for the market. And bonds are going to rally with crypto. Bonds are rallying with crypto. Bonds are going to rally with stocks and crypto. Maybe even get the dollar go up. And obviously, inflation expectations are coming down. This is the biggest catalyst. That cash is going to come back into the system because oil is getting wrecked. Oil is getting wrecked, bro. Oil is getting wrecked. Inflation expectations are coming down. It's over. Inflation is done. It's pretty. Am I calling it? Am I calling it kind of early? Sure, but you got to have balls. You got to say something, right? It's not that crazy. You see the evidence of inflation coming down. Inflation is done. And what does this mean? This means yields can ease. This means the Fed is done. This means investors can take their cash, come back into the market. Not can, they will, because they don't want to miss the rally. And if a recession comes next year, which I expect it to get more recessionary, I don't think it's going to be that bad. Well, here comes fiscal policy. Here comes Joe Biden. Pump, pump, pump. You should research. Those two showed good resilience in the bear market and we will bull market. Caspa at all-time highs. I'll ask my brother to look up Caspa. He'll probably let me know. I'm not the expert on the deep dives on those. But like I said, I hope it goes higher for you, man. I really, whoever you are, I don't know. You have a female picture. I don't know if you're a guy or girl. Some dudes have female pictures. So anyways, I hope it goes higher for you. I really do. I'm not trashing no coin. I'm just trying to give the truth that I know, which is, Chainlink has a huge real use case, and it takes away a lot of, it's a solid, it has the best fundamentals in the market, right? Outside of Ethereum and Bitcoin, it might even have better fundamentals and not as much development as Bitcoin, Ethereum, obviously, but better fundamentals as far as if crypto were to fail, it is a financial advice. If crypto were to fail, Chainlink still goes up because it's not tied to crypto. It's tied to everything. It's an infrastructure, right? That's all I know. Anyways, hey, you guys stay blessed. Again, I'll catch you next time on a new episode of Which Coin is Going Higher. No, I'm just kidding. We'll catch you next time on the macro. Stay blessed. Get your workout. Get your diet in. Stay disciplined and do the best you can each and every day. I appreciate you guys, and I'll catch you next time.